There are so many people who believe that you should stay away from stock market, or I can say equity market, because it is the worst place to invest your money. But that's not true. Hey everyone, this is Anuj Vohra, and in this video we will discuss why equity is the best place to invest money based on the historic returns of the stock market. But before starting the video, make sure you subscribe to the channel and do hit that like button to motivate me. So whenever I upload a new video like this, you will get notified. Today in this video I will be talking about historic returns of equity. But before understanding the data, one must need to understand the concept of real return. So let's first understand. So now what is real return? So the definition of real return is really simple. Eliminating inflation rate from our investment return is called real return. Now what that means is, if you get 7% return in your bank FD and the inflation rate is 5%, your real return would be 2%. That is 7 minus 5. Now let's look at the data and understand other asset classes versus equity. So here is the data of more than 200 years. So one can easily understand why equity is the best option compared to any other asset classes. So here we can see that stocks, bonds, bills, gold and dollar. So the chart is based on the US stock market, and all the stock markets across the world replicate the US stock market, right? So that is why we also need to understand what is going on in the US stock market and how US stock market has performed so far. As you may have saw in the thumbnail, that the value of $1 in 1802 is more than $706,000. And if you compare with bonds, bills and gold in returns, in the chart what we see is real return, 6.6% real return. So if we calculate the average inflation rate in the United States is 2%, so the actual return would be 8.6%, and if we convert it into the real return, it is 6.6%. so even after getting 6.6% return, the return is phenomenal because of the power of compounding. This chart also exposes to all the people who believe that gold is the best investment. The problem with gold is it doesn't beat the inflation, and that is why the return is very low, and that return is 0.7%. If you just compare stocks, bonds and bills, there is still a huge difference, that 6.6 versus 3.6. It's a difference of 3%. This chart explains that if you stay invested for longer period of time and if you want to create generational wealth, equity is the best option. Bonds have also performed really good, but there is a huge difference between stocks and bonds. It is the value of $1 has gone up to $1,632. So this is the primary reason. If you have a vision of longer period of investing, let's say 15, 20 to 30 years, equity or I should say stock market is the best place where you can invest your money. No gold, no bond, no real estate, only you should focus on equity if you have the vision of longer period. So do share with your friends, educate them why stock market is the best place to invest. No matter how the worst time is going on, you should stay invested for longer period of time. You will get high returns. I hope you like it. Please do like the video, and I will see you in the next one.